Quantum computing. What is going on with quantum computing? Well, looking at the past year-to-date history, it looks like it would have been a great buy. We could see it's been going pretty great for quantum stocks with more than 100% gains from a surge in mid-September to early October. Then, over the span of the next month, the stocks lost over 50% in market cap respectively. So what exactly happened here over these 3 months? Let's start with what quantum computing actually is. In very simple terms, it's just more complicated computations that are able to solve problems and complete tasks much faster than a traditional computer can using quantum bits, also known as qubits. In this example, we see a quantum maze, a theoretical visual of the difference between a standard and quantum computer. While a standard computer searches for the exit by taking each path individually until it reaches the end, a quantum computer uses qubits to search all the paths simultaneously to complete the maze much faster, as it can be in 2 different states at once. Now this is extremely oversimplified in what quantum computing is, but essentially what to take away from it is that it can find solutions and complete tasks much better and faster. So, why does this even matter in the first place? Because of the stocks increasing so rapidly in late Q3 of this year, you would assume that some type of breakthrough or advancement has been made in quantum computing. Well, the thing is, quantum computing is not that refined and is still in its early stages. Real-world applications still use standard computers and currently outcompete quantum computing, as there is no major market for it at the moment. It is still more of a theoretical and experimental technology that a few select places currently use primarily for research. But companies are still developing quantum in hopes of building a market for it. Now, it is not clear if these advancements in quantum computing will actually lead to real-world use cases just yet, but right now specifically, it is nowhere near where the market was suggesting it should be a couple months ago. Now, let's specifically look at the 3 quantum stocks that have been grabbing attention and have been moving in tandem together. IonQ, Rigetti Computing, and D-Wave Quantum all have been rising back in September. This is all primarily due to banking investments and possible government stake announcements into quantum computing and AI. No companies were explicitly listed in these investments, but due to these companies being directly tied to quantum computing, they ended up rising as a result. Now, let me ask you this. If these companies had these investments, then you would assume there is reasoning behind it. But like I said before, this is all still experimental technology. Unlike AI, there is not as much support going into quantum computing, as well as no real market for it yet. We can see this because none of these companies are profitable at the moment. For Q3, IonQ had revenue of $39.87 million and a net income of negative $1.05 billion. Rigetti with $1.95 million in revenue and negative $200.97 million in net income. And D-Wave with $3.74 million in revenue and negative $139.99 million in net income. These companies are literally just money-burning machines and have no market. Now, if a company is seen to have potential even at a loss, then it would make sense why you would invest into it. But at its high, with a market cap of roughly $22 billion for IonQ, $9.7 billion for Rigetti, and $9.64 billion for D-Wave, it does seem a bit crazy high for companies that have no market at the moment. To put into perspective, at around its peak, IonQ was worth the same amount as companies such as Rivian, Williams-Sonoma, and Affirm, just to name a few. Is quantum computing really worth this much at this stage that it's worth the same as these other better well-known companies that actually have a market? Something I also found interesting is that these companies' headquarters do not necessarily reflect their worth. Tell me this, does this look like a $22 billion company's headquarters? Do either of these look like $10 billion companies? Now, I know, headquarters aren't necessarily a good indicator of what a company's valuation is, but I just have to reiterate, they are clearly non-profitable and are working on speculative technology. Let's take a deeper dive inside one of these companies and look inside the SEC filings for IonQ specifically. It tells us something very interesting. They filed several Form 144s in the past 6 months, which reports the proposed sale of securities. Now, what does this mean exactly? This means that when an affiliate within the company wants to sell their shares of the stock worth over 5,000 shares or $50,000 worth of shares, they have to report it with an SEC Form 144 and have 90 days to sell their shares afterwards. Why is this important? Going back to earlier this year, IonQ stock looked to be rising steadily in the months of April and May. Then in early June, there was a pullback in price and the stock remained relatively stagnant. Around this time, the former CEO of IonQ, Peter Chapman, had started to sell off massive amounts of his stock that he owned. On June 16th, he sold 3,581,193 shares, equating to $136.5 million, and then the next day, June 17th, he sold an additional 910,740 shares, equating to $34.4 million. 3 days later, on June 20th, he sold an additional 1,497,311 shares, equating to $59.7 million. Later, near the peak of its price in October 7th, he sold yet an additional 814,601 shares, equating to yet another $65.2 million. This totals his sold shares over the span of 4 months to be roughly about $295.8 million as his stock rose up. Now, even though he left the company, he has every right to sell his stock and profit off of it. But if you expect actual progress in the company and for it to grow further, I would think that you wouldn't want to sell off the majority of your stock options all at once. Looking further in their filings, IonQ has only seen net selling of stock and not that many insider buys, presumably due to the price of their stock being much higher than they were potentially expecting at the stage that they were at. In an interview with Barron's on May 22, 2025, the current CEO Niccolo de Masi went as far as to say, "We're in the business of quantum, just like Nvidia and Broadcom are in the business of classical GPUs. I believe IonQ will be the Nvidia player. There will be other people that copy us and follow us. They have always copied and followed us." Then, a couple weeks later, on June 11th, he sold a majority of his stock options of 2,597,500 shares, which is about $104.8 million. Even the current CEO, right after making that statement of confidence in IonQ being the Nvidia of quantum, literally sold a majority of his shares a little while after. Now, does that really show confidence, or does that show that he was possibly just trying to hype up the stock even more so that he could cash out since he does not believe in the current value of the company? The CEO of Rigetti even made a statement back in March 2025. "Our peer companies are a lot more optimistic and aggressive with their forecasts. We share their enthusiasm for the long-term potential, but when it comes to the next 3 to 5 years, we are of a more conservative view." The CEO even understands that profits won't come for some time, as they are primarily in the research and development stage and are not pushing to rush progress. This is before the hype that drove quantum up 6 months later, roughly around September 10th to October 15th. During this time period, investors had piled in cash into these stocks due to hype, and just a month later you would have received about a 50% loss if buying at the high. But just continue to trust, it will reach back to its all-time high. But most likely not. Who actually even knows at this point? Nothing makes sense in this market. Now these quantum stocks have been on a continuous downtrend until November 24th, where there has been a brief rally back as a ton of call option contracts have been traded and caused stocks to soar. This came to light after news came out regarding China catching up in the quantum race. This resulted in the Trump administration to say that they are moving on to quantum after having focused on trying to be ahead in the AI race. Now, it is not clear what the outlook is for quantum and these companies at this point, because as I mentioned before, the technology is just not there yet and they are burning through investor money in hopes of eventually making a profit and breaking into the market. But if the government does confirm it is taking a stake into quantum computing companies, just like it did for Intel, I could see it rallying back up even further. Although in my opinion, they are still very overvalued, but at the end of the day, a lot of things in the market do not make sense right now, and are overvalued for what they provide. The idea of quantum computing, as the Rigetti CEO said, has long-term potential, but I also think the idea behind it still has a relatively long way to go. I mean, it has to really make huge advancements and become very accurate and consistent in testing to replace the normal computers we use today, as well as being affordable enough to justify its potential cost. But I want to hear from you guys. What is your perspective on the situation, as well as how you think this all might play out, and whether you're bullish or bearish on these quantum companies? Please give this video a like and subscribe to the channel if you enjoy the content. Thank you so much for watching, and I'll see you next time.